mean, it is a backup. All right, good morning officially. Welcome out, everyone, to the Market Watch Group Weekly Opening Bell. I am Scott. Of course, I will be your host. Whoops, that was fast. Always remember, we're not brokers or advisors. We don't give advice or recommendations. This is for education, illustrative purposes only. Today, we're going to talk about the opening futures and the news. We'll review the economic calendar for this week and our economic posture, if you missed it. It is posted in the recording section if you want to go back and review. Mindset for open trades. We talked about this. There's not a lot open right now. Right? I would imagine. We've been on this 2-week grind and we ended up getting the V. We did it without much volume, so it would have been tough to have tried to have too much on. We'll discuss that. We'll look at the opening range and what the trade implications are, what looks good on our opportunity list. I will tell you that I'm still thinking about Google today. And we'll talk about the trading plan section of the week. Let's get into it. We'll start here. Now the futures are going to start slightly up. S&P futures are up 0.15, Dow 0.10, NASDAQ 0.13, Russell 0.20. Crude is down marginally, gold down marginally. Okay, what's the dilemma? Powell faces a very different rate dilemma. It's no longer if, it's how much. All eyes on the Fed at Jackson Hole, U.S. future steady as wait for Powell begins. As if, it's a funny thing, because he will speak, but I just, I don't know how much he's going to come out and be like, well, this is what we're going to do in September. It'll be interesting this week. What are your thoughts? Are we gonna pull back as we wait, and then he's gonna be the catalyst? Are we gonna drift sideways as we wait? What are you looking for? I'm curious. I'd like to know what everyone's looking for here. What are your expectations? That's really about it. Let's look at what the economic calendar has this week. Sideways and then take off. Okay. Fed Christopher Waller gives welcoming remarks. No, then we have Bostic and Barr minutes from the July meeting. Jobless claims. And then on Friday, Jer Bear will give his speech. I don't know why that's popping up like that over there. That's very strange. It's not supposed to when it's high. Okay. Yeah, perfect. As of now, we're sitting around 3-1 in that little, did I reload this? Let me see if I did. In that little, what is the Fed going to do consideration? 3-1 in favor of a 1/4 point cut over a 1/2 point cut. All right. If you missed it, we're going to take a quick peek at this week's posture. That's a trade log. I must have shut it down. Sorry, give me a second. Posture. Market posture log. Okay, where did we end up? Oh, Steven, I'm curious. since you missed it yesterday, traveling, where you ended up. So what did we do? We gave a quarter point back to the long term because it popped back into its prior trend. It made a very strong move back in. Steven said even more to this. We gave it a half of a point. And you said it should be more. I don't know. You would have to give an explanation, because if you're giving credits and taking away, credits and demerits we call it, where you're like quarter point for this, you'd have to be able to like acknowledge what are you giving 3/4 or a point for? Because we don't just arbitrarily assign value. At least, I mean, you can. It's your posture. You can. It's your posture. I don't like deviate from that system where I'm like, that's a 1. That's only a 0.5. Because I feel like that all of a sudden gets very subjective when the goal is objectivity. So I gave it a half of a point because I gave it a quarter point for one thing and a quarter point for another thing. So there were two distinct recognitions. So a half a point we actually went back and forth between a quarter and a half. So be careful with how fast yours goes. So we gave a quarter point back on the long term. We gave a half of a point jump. It lost a half here, and then it gained that half back. Yeah? Now, if you look at the chart, it lost a half from here to here, and it gained it back from here to here. That's all it did, right? That's all it did. So, what we don't know yet, and the steep rise is what we scored. That's the V. We called that the V out. We called the V out. We said, what do we give the V? The V is what gave it the half a point. A V is strong, half a point strong. Right? We don't have a trend yet. We don't know until this thing makes a drop what's next. So that's why I'm always careful not to like make abrupt more than half point moves on any given score. Okay, volume. Volume increased. So we got a quarter point increase on long term, half a point increase on the short term, quarter point increase on volume. Major market stayed the same, but stayed positive. Sector rotation stayed the same and stayed neutral. So the sectors, there was enough iffiness that we're like, but it does look like it's veering positively. And we got a half of a point on our VIX. So my score increased by 1.5. Now here's the thing. That's as big as any of the drops. We dropped 3/4 from here to here. Whoops, what did I just do? From here to here, we dropped 3/4. From here to here, we dropped 1.25. From here to here, we dropped 1.5. Then we stabilized. Then we got 1.5 back. I feel good about it. I like the score. The highest point we got at 554.87 back here, and we are literally opening at 554.87 this morning. I mean, it could. Look, you can see the stochastics. You don't have a lot of volume. We're now at this resistance level right here, this prior resistance level. what do we think would make sense from here? The right shoulder in this inverted head and shoulder. Yeah? Let me get my drawing tool up. Come on, drawing tool. Where are you? There we go. Yeah, I definitely think I need a new drawing tool. So this is the resistance level we're at now, or seem to be pressing against. The next support level seems to come in here. Let me see. So you can see where the 50 is as it's coming out of this here. That seems like a natural level for me for some type of a retracement. However, it may not be that much even. We might just flag a little and then make a run all the way back up for the full V. Hard to know. Right? It's got quite a ways before it gets back into that other trend that we had. In fact, you can see that we're kind of on this bottom one here that's moving up. You can see this line as it moves. We're just tracking right there for now. We'll see. Tough. You're gonna have a hard time. You're gonna have a hard time justifying reward to risk ratios. Looking at a trade right now, right? Because it's like, well, where's your stop? Even if I put my stop back here underneath this, if I entered now, look how close I am to the all-time high. So we have to be prudent in our thinking. Yeah. Okay. Let's go to the watch list. Let's go look through. We have the score. Here's the underlying premise we're working off of. The buyers are back in control. That's what we're saying. They've convinced us that they're back in control. We don't always use the all-time highs. Well, in this case, it wouldn't be a guide now. I think it would have a hard time getting there now. But honestly, I wouldn't be shocked with the strength that this move had. Would anyone be shocked if it got this last little bit right here? Right? That's the last bit before the all-time high. It's got to be running out of steam. I mean, it's moving on fumes. It's moving on fumes. But that's institutional right there. Even if it doesn't come with big volume, what it means is there were no sellers. It came up. But I think it is some type of this is going to be like a cup and handle, even if it's a steep cup and handle. So let's say it pulls back to here. Where do I think it would get next? That's an easy go right there. And now I have the cup, right? Let me change my color for the cup. So now I have the cup. It's not usually this steep, the cup. Then I would look for the handle, and that would be the next trade I would look for, which is the next higher low. That's the one where if it breaks out, it can really go. Yeah, I mean, I don't know. This makes the most amount of sense to me. So this is my number one expectation. If you remember, we talked about, hey, have at least 3 ideas, 3 scenarios that might play out. We talked about the V pattern It wasn't our top. No one was like, yeah, I definitely think the V is coming. But we were like, it might. So if it does, you better have something on now in order to capitalize. I hope you guys all remember that conversation. We had that. Now what? Now what are our different possibilities? Now remember that the blue and the pink actually play well together. Those two would be a bullish trade followed by another bullish trade and looking for a bullish end of the year. Miguel just said, hey, the VIX is up right now. Even though the market's up a little bit, we're starting to get a sense. I like that you're calling that out. Let's pause for a second and go look at that. Let's go look at that. It is, I mean, it's up, but it's also down from its high, right? It's up 4%. It opened up at, 1594, got as high as 1607. Now it's back to 15.5. But it does look like it's a turn, right? Like it's come down and it's starting to turn. That was a terrible line. Terrible line, Scott. You're better than that. We think it's turning here. And if it's turning, then it's making its next move. But the thought is it's not going to do much, possibly, and roll over, and that's the next lower high. Whether it's 2 or 3 days confirming a flag, whether it's 3 to 5 days and it's a little bit more of a steady pullback, that's definitely what I'm looking for more than anything else. Let's go to the watch list. Give me your thoughts. And the question is, who's starting to pull back? Apple pausing. It could be a couple of days. It could be 3 or 4 days. It could be 1 day. Could be 1 day. But it looks like it wants to start being bullish again, right? Amazon, it's pausing, which makes it look like it's hitting resistance. But we don't see sellers, really, yet. I'm just kind of waiting for them. AXP, all the way back up to this resistance level here. Now what? Now looking for this type of a consolidation and then seeing if it can finally get through. Bank of America. Now, some people are like, oh, it's under the 200. I don't care. The 200 is not like a you shall not pass line for me. It's a reference point. Actually, interestingly, that's not the 200, is it? That's the 50. Sorry. I think the 200 dropped off my chart. I do want it still. That totally disoriented me because I'm like, wait, that's not the 200. Let me get it back on. Tomorrow evening, Trading Foundations. We will do some chart work, and I'll show you like from jump how to set up charts. But in the meantime, let me just put a couple of these back on. 1, 2, and let's make you not 1,000, just 100. And I think this was reddish. And then we'll make you 200. And we'll make you blue. Okay. Sorry. Nah, I had the ribbons. When we're convincingly back on, I only keep the 50. But right now, I like to have the ribbons so that I can see where's the interplay. So we're under the 50, not under the 200. But no, I think we could flag to the 50 or we could pull back. And if this thing's pulling up, it could come all the way back and meet that. Yeah. Patience, though. BLDR, I don't know, maybe. Here's Citigroup. Citi looks great. Just looking for the pullback. Let me make sure I can see charts. Would you be able to specify the stochastics that I use? Okay, so I use a stochastic slow, and it's going to have 3 lines typically in its calculation. Stochastics, 2 lines. Sometimes people have 3 in theirs. If there's 3, so mine is a 7-3. If you have 3 calculators in your slow, which some in charts might have, you would want it to be 733. 733. Overbought and oversold lines, that's just where these green lines are. That just draws straight green lines here to mark those levels. I put mine at 70 and 30. Typically the default is 80-20. Look at us doing some chart work while we're here. Amazing. Yeah. I think we all see the same thing. We're not going to be like, oh, look at this magic chart all of a sudden, except for maybe Google. I think you could take Google. It's early enough. If you look at the Heiken Ashi, that's your first momentum candle. The problem I have is if we put Google on and the market pulls back, can Google withstand that, or is it going to hiccup? Or did it already hiccup? That's what I'm going with. Here's what yours looks like. Yeah, slow stochastics oscillator. That's the one that you want. And then it should allow you to put that on, and that'll be it. Once you add it, it should allow you to edit it. So if you look to the right where you have a period for like your moving average, that's where you get to change settings. Anytime, every indicator that exists, you can change it. You can make it faster, slower. A lot of people just accept. It's like moving averages. They're like, oh, I don't use the 50. I use the 26. And they know they can change moving averages, but then they're like, what's your stochastic or your MACD? They're like, it's a 27.7 or some big long one. They didn't change it. So, anyways, okay. All right, where were we? Back to the charts. So Google, yeah, I'm actually thinking about it. I do think Google could. It's fighting some antitrust news, which is a little concerning. I'm gonna think about that. We skipped some. Let's go back to the C's. I've taken my I've taken my foot off the gas with defensives like Colgate-Palmolive, Coke, things like that. Chipotle, yeah, they're struggling with some CEO news that was a little damaging. Costco, okay, Costco, second day. Costco's early in the consolidation pattern. I'm thinking about that. Carvana maybe starting. If we get any kind of interest rate cut, Steven says the market will react positive and drive short-term SPY. That's my anticipation. Ooh, I want you to listen to what you just said. You didn't score what you saw. You are scoring what you're anticipating. And that's the danger. So be careful. That's all I'm saying. All I'm scoring is what did I see this week happen? Yes. Do we think about the Fed and the implications? And yes, but we don't want to get in the business of anticipating things like that. We're in the business of watching and waiting and seeing. Okay. Dow. Like everything, overextended, Fastenal. Okay, so here it is. Fastenal is it's trying, but it's struggling. You can see it's moving in a generically upward direction. The cycle is showing upward, but it's not getting anywhere really well. How do we manage for this? Stick to the Heiken Ashi. If it has any chance, this will help you. So right now, you might have a stop down here for today, 66.50. You got to give it a little bit of room, right? You can't have it too tight, 66.40 maybe, something like that. And then tomorrow, move it. It's trying. You can see, look at these little guys compared to these candles. It still has. It still hasn't gone wrong, right? But it's looking a bit dodgy. If you were British, you would say that. Bitcoin, nothing really there right now. Gold pulling back from its new highs. General Motors pausing. Google is up. Home Depot kind of flat. IWM kind of flat. JP Morgan kind of flat. It's a pattern. KBH. Coca-Cola. See what I mean with the defensives? I don't know. Meta. Oh, Meta looks flagging. Even though it's up a little today, it looks flagging, right? I mean, you can kind of see it's just not quite that big. I don't know why I can't draw today, you guys. There we go. I mean, whatever this is, if this comes down and then pops out of there, this one actually feels more like a cup and handle now, right? With the flag handle, just a little pinky teacup. Oh, it's so fancy. Yeah. Yes, it is fancy. 3M. Again, defensive. I'm like, oh, that doesn't look good. This looks great. Just need a pullback. Microsoft. Oh, flagging on Microsoft. See the early patterns? They might be the ones that go. We have to be ready. That's what we talked about on Sunday. Are we ready? Let's be ready. Micron, Netflix, all the way back up. Almost all the way back up. Right up underneath. NVIDIA pausing. NVIDIA has earnings in not too long, so you got to be careful with that. Palantir pausing. The Qs are pausing. The SPY is pushing a little bit, but it's, I don't know. I could see us down 0.5 to 0.75% by the end of the day. TSM, okay. We're starting to build a list of those that are entering their consolidation phase. I mean, we don't know for sure. We're 16 minutes in. For all we know, at the end of the day, these could turn into bullish candles. And what we're seeing right now with these reds turn into shadows. Wicks. We don't know. That's why we don't. That is why we want to make sure that we wait and see. UUP. It's down. It's under. It's holding steady where we would want it to hold steady. It's at its lowest levels in 4 months. That's great for the market. Okay, so the VIX is now only down 4%. It started down, or excuse me, up 4. Started up 5%. That's what Miguel flagged for us. He said, "Oh, it's up." You know, even though the market's up, the fear is also up. When do we? What do we tend to lean towards for implications of that? What I tend to lean toward is that the smart institutions who tend to hedge first, they're the ones who are going now. They're willing to go a little early. Walmart, just kind of holding after earnings. Let's look at the sectors. XLB. Materials, they did okay. They're as bullish as anything else, I would suppose. Communication services looks real strong. A lot of good money flow there. Energy, still kind of underneath. Hasn't done as much. Financials look great. Financials are all the way back up. Industrials not quite as strong, but pretty strong. Actually, almost. Yeah, they're all right there, right? We just need a nice, steady pullback, and we'll be ready to go. How are you guys feeling? Patient? Patience is holding up. I want to trade. I'll tell you that right now. I want to trade. I feel like we did a good job through this. This was a weird little correction. It was fast. It was kind of like, you see what I mean when I say fallout windows. It was pretty violent for a minute, and then all of a sudden it's like the storms we had the other day when I had a lake outside my house, and then all of a sudden you're like, where'd that lake go? And skies, and you're like, what? Wasn't it just nasty? Wasn't it just... Yeah. That makes sense, Sandy. I think we're all kind of getting to that point, getting a little bit excited. Especially because of the rationale. And it's the Fed. And the old saying, don't fight the Fed, is true. If we get into that point, yeah, I could see a great bullish fall, Santa rally, whatever. Do I have a cap on the number of different long entries you get into? Great question, Miguel. That would be controlled through section 4 of your trading plan, risk management. So what you're going to do is you're going to think about a risk per trade, right? A trade risk cap. So if I have a $20,000 account, I might say 1%, $200. That's the most I want to lose on any individual trade. Or I might say 200, or I might say 2%, and that's 400, or some anywhere in between, right? We work off of, if you look at our spreadsheet for record keeping, you'll see a formula that says Kelly criterion, and that is a risk optimization formula. And I don't look at it by number of trades. I look at it, well, I do, but I look at a check and balance system between 3 factors: trade risk, number of trades, portfolio heat. Those 3 things all circle around and have to jive with each other. So my portfolio heat is my maximum risk in the account. That's what I'm using Kelly criterion to help me understand what's the optimum level. Every system has an optimum level. Yours, mine, that one, this one, all of them. Everybody's is different. But Kelly is what, once you have established, let's say 50 trades worth of a Kelly criterion, now you have everything you need to establish. We have to, you know what? We're going to do charts, and we're going to do a nice Kelly criterion risk management talk. In our charts will be in the beginner session tomorrow, Kelly criterion in the intermediate to talk about risk. So we'll go into this deeper. But essentially, when we have, if I say, let's say that I find out my Kelly is 18%. I'm going to reduce that a little bit, probably down to about 14. Tomorrow night, I'll tell you why. And then 14 is what gets distributed across all of my different trades. That's maximum, remember. I would only want maximum heat on if I have all my trades in the best conditions. The rest of the time, my risk will fluctuate. You know, maybe it gets close, maybe it gets there. It's hard to say. But I would say, you know, if I ended up, let's say I moved my risk to 1.5%, then I would have 10 trades. Now, if I ended up with, if I said 10 trades is what I'm looking to have on, if I ended up with 12 or 13, the fact that I reduced my Kelly means I had room for that. But what I would say is it's going to put you anywhere from 4 to 5 when you're just getting started, upwards of 10 to 12. And these are actively managed positions, right? These are short-term trades. I would say that's probably going to be where you find your range when it comes to building out your risk management plan, which we will be doing in 2 more weeks. And we'll have these exact conversations, but I do think Kelly is a good one to have. That's a great question. Okay, let's go back to, let's finish this list before we wrap up here. Where are we at? Let's go XLK. I'll tell you what, when you're in a market like this, when you're just waiting, you know you have to wait from here. We know we can't just get in. We have to wait for that next little dip. It's got to come. Hey, good to see you, Steven. Look to see you come tonight, so excellent. Okay. So the technology looks great. All of a sudden, Staples looks okay. It doesn't look great. It looks steady. Utilities. Oh, look at utilities dying on the vine. What happened to all this momentum here? Got defensive right before that. And then it's like, wait a second. Then everybody remembered that they're trading utilities. So bad. Healthcare. There's some strength there. I don't love trading healthcare, but if you do, there's strength there. And consumer discretionary. It's across the board. It's broad based. This isn't like it's only the big seven. Like you'll hear people talk like that. It's not. This is everybody. This is money flow. I'm excited. I don't know what you're hearing from whatever talking heads you read or listen to. If they're feeling this, but I got to tell you, I think that we're seeing everything that we want lining up for the next stage of our bull market. Everything's in place. Fundamentally, market tech fundamentals are good. Economic fundamentals are good. Inflation's come down. Fed's about to start being more accommodative. Great. Okay, real quickly. We are working on Section 2.